I think both of these companies have a huge amount of growth in front of them. $806 billion in GMV, okay? Compared to Amazon, Amazon is doing $277 billion in GMV. A huge differential. So let's go to China. If you actually look at these stocks, look at Tencent, look at Alibaba, over the past year, net, these things are down. Tencent's down off of where it was a year ago. Alibaba's down off of where it was a year ago. And these are really two of the most dominant Chinese platform companies. Alibaba's in plat. Tencent is not, because it doesn't have enough transparency with the information it shares with the US exchanges. But what we're seeing with Alibaba, which is announcing earnings on Thursday, we wanted to dive a little bit into the numbers about just how big Alibaba is and how can we compare that to Amazon. So kind of interesting here, what Alibaba's doing in GMV, they actually haven't publicly disclosed this data for a while, but from our sources, they are doing about $806 billion in GMV, okay? Compared to Amazon, Amazon is doing $277 billion in GMV. A huge differential, right? That's almost 3x the amount of GMV, the total throughput on Alibaba, which they have multiple marketplaces in China. They have Taobao, they have Tmall. They do a lot of B2B distribution in China. So China is actually ahead of the US in bringing online a lot of the B2B distribution transactions, whereas the US is really all B2C at this point, as compared to B2B being a real factor for marketplaces and e-commerce. So there's a few differentials as to why. But when you look at their revenue, okay, so Amazon has $233 billion in revenue, and Alibaba has $56 billion in revenue. Also, let's understand why. So Amazon's doing a lot of 1P selling. They are also a seller, in addition to their 3P third-party sellers. Jeff Bezos was saying 58% of the $277 billion number, which I think is around $160 billion, is actually sold by third-party sellers. But that leaves over $100 billion that Amazon's actually selling as a 1P seller, right? Where they buy a product, it goes on their balance sheet, and then they resell it. Whereas Alibaba's only doing about $56 billion in total revenue. So Alibaba's doing much less what we would call linear selling. And actually in China, the whole idea of being able to take a take rate, where if you sell a product in my marketplace and the platform takes, say, 10 or 15% of that $100 product, that concept doesn't actually exist very much in China. Instead, what happened was when eBay and Alibaba were duking it out many years ago, Alibaba decided to beat out eBay by saying, we're not going to charge any take rates, any transaction fees at all. And that let the buyers and sellers meet and communicate off platform, because now Alibaba wasn't relying on taking a take rate. So they didn't have to worry about buyer and seller connecting and cutting Alibaba out of that transaction, right? And that's very much so more in line with culturally how consumers, especially business consumers in China, prefer to interact when buying and selling. So what did Alibaba do is they built an ad revenue model. So now for sellers and merchants on Taobao, on Tmall, really a lot of this $56 billion in revenue is generated from sellers and merchants taking out ads to give themselves sponsored listings, to give themselves more tools and services that let them sell more product or be more visible in Alibaba's different marketplaces. Amazon just rolled out advertising in the past 12 to 24 months, right? So you can kind of see how the business models are very different, and therefore the revenue profiles are very different. That said, I think Alibaba's beat for the past, maybe 14 quarters in a row now. Profit is expected to grow at around 27%. Revenue is supposed to grow at 38%. Still very strong growth metrics. But this is supposed to be their slowest growth in 14 quarters, being affected by the US-China trade relationship. Tencent, on the other hand, which is announcing earnings tomorrow, is supposed to have about 24% in profit, whereas the year prior was only 2% in profit. And both of these companies also have very strong cloud businesses. If you think about Amazon with AWS, and Microsoft with Azure. Basically, Alibaba and Tencent are also the number 1 and 2 players in the cloud platform arena in China. Tencent also has a lot of video games. So they own WeChat, which is a hugely popular messaging platform. Now it's a payment platform in China, and video games. So they own the maker that makes Fortnite and a number of other popular video games, both in China and in the US. So 2 different profile of companies, right? Alibaba much more focused on marketplaces, but they also do have cloud platform. Tencent much more focused on these kinds of more maker type platforms, content platforms, that also competing in the cloud platform space, but also have different parts of their business with messaging and so on and so forth. I think both of these companies have a huge amount of growth in front of them. I think both of these companies will be able to beat earnings going into tomorrow and the day after. I think investor expectations are already hampered because of US-China trade relations, right? So the negative impact that that's going to have on the stock is already very much so priced into the expectations going into these earning releases. But if you look at the amount of growth, right? If you look at Alibaba, $800+ billion in GMV, $56 billion in revenue. When we look at their actual profit, their net income, they're making $12 billion in profit as compared to Amazon's $10 billion in profit. So it's still a company with a huge amount of growth potential in front of it. Just if you think about how they could monetize more revenue on that $800+ billion in GMV, especially compared to what Amazon is doing in their revenue to GMV ratio. Thanks for watching our latest clip. If you enjoy the content we're creating on Winner Take All, please feel free to leave us a comment, subscribe, and definitely join us on our next live stream.